Hi, good morning everyone. My name is Ram Dhamija. Today is 22nd of February and Saturday. So we are over the weekend and the cues that are looking from the markets worldwide are not all that great. So yesterday US markets actually closed down by more than a percentage points and NASDAQ I think fell by more than 2 percentage points. And also our markets are looking very weak. The gift nifty is indicating almost a 200 point cut for Monday morning. So once Asia opens on Monday morning, we are going to see the impact of the US downturn happening. Now, what was happening for many days was that the world markets were all fine. There was actually no problem, and only our markets were falling down. So while US was making all-time high, we actually fell 13% from the top. But now that US market has corrected, now we will have to see whether it was a one-day correction, because the reasons ascribed were not very significant. Like for example, Walmart earning was one, and there was some problem with General Motors and so on. But we will have to see if the Magnificent Seven, which are the top seven companies over there, which have the highest market cap weightage, if those companies start to correct, which is basically the main component of your Nasdaq, then this might contagion might spread. So we will have to wait and see for that, how the US markets actually react on Monday and how the US futures opens up. Now, for example, hypothetical scenario, US futures are again down by a percent and a half on Monday morning. Then we are looking at a very rough phase for our markets, because our markets don't have any strength as it is. And on top of that, if the world markets turn bearish, then we are in for a very good down correction. And also there was some amount of you can say uptrend in small cap, mid cap, momentum, alpha names over the last 2-3 days. But yesterday even those kind of sold off. On Friday even those kind of sold off, so all these indices also ended up in the red. So that was not a very good indicator, saying that these indices are going down, because they had recovered 6-7% from the bottom, but they lost out a couple of percentage points yesterday itself. Now, if this is the kind of opening that we have on Monday morning, then you can expect these indices to go down even further. Now, the last bottom that they made, which was made about 3-4 days back, 5 days back, that is going to get tested. Nifty already is at the bottom. So, as I said, then on Friday itself, we actually broke the last bottom of 22,750 odd. We broke that on Friday. So we will have to see. The gift nifty is already indicating 200 point cut. Now, does that mean we touch 22,580 odd, 600 odd, or we actually go below that? So I will take you through what exactly how the market is positioned, and then I will discuss what are the other things to watch out for. There are a lot of cues that we need to look at. So this is the Nifty chart that I had shown you. So this is the trend line, which is going to be very important. Yeah, so this is the trend line at 22,700 and 780 odd. Now this, as I had said, we are broken now. Now the next support for Nifty is at 21,780, and the election day low, okay, is even further down. It's at 21,280 odd. So this I will take you through. Just have a look over here. This was the election day low, as you can see, 4th of June, and it was made at 21,280. Now that's the next logical support. If this doesn't hold, 21,800 doesn't hold. Now one might argue that there is a 1,000 point gap between these two, but the problem is whenever the markets actually fall, they relentlessly fall for 2-3 days, and then they take off about 800,000 points. Like for example, if you see over here, 23,700 to straight we went to 22,900. So it was a 700-800 point drop in 1, 2, 3, 4, 5 days. So this is how the markets actually behave, and when they go up, they continuously go up for 5-6 days. So if this particular support, where we have been 1, 2, 3, 4, 5, 6, almost 10 days we have been in this particular support, if this breaks, then you can expect 800,000 points to shave off immediately, because the move is going to come. And I have also said this in my previous videos, that if you have to break down of this particular range, then there has to be some global cues, because there is no negative local cue that is there. So this global cue has come in the form of US markets correcting, and then you can expect over here that there is going to be a significant fall if we break this. Now coming to how the straddle prices are for next week. So there was a decay of straddle prices. Do remember it's only a four working day week, so there is a holiday on Wednesday, so the straddle prices have to adjust for that. So straddle is trading at about 286. There was some decay that happened. This spike that you're seeing over here came in the downfall, but after that it was a smooth decay. So if Monday there is a huge down opening, then it is going to go up. The straddle prices are going to go up, which might not necessarily be so bad for the option sellers, right? Now coming to how the open interest is stacked up. As you can see that open interest for Nifty is at 0.73, so it is bearish. There is nothing bullish about it. 16 crore calls versus 12 crore puts, so it is a bearish setup that is there. And you can see that the call writers have written calls at 22,900, 23,000. There's 1 crore call, so they are not expecting 23,000 to break, the call writers. And then at every level there is a call written over there. Whereas if you look at the puts, there is some little put that is written at 22,800. That's not going to hold, but the main put, significant put, is at 22,500. So if this level breaks, then you can expect that 22,500 should come pretty soon, because there's not going to be too much of resistance anywhere, right? Now let us come to how the indices are stacked up against the 52-week highs. So as you can see over here, Fin Nifty is the lowest at minus 7.98% correction. Nifty is again at 13%. Small cap is at minus 20 almost, and Nifty next is at minus 21, and then PSE, etc. So expect all these indices, if there is a big crack on Monday, to go down by 2 to 3% more at least. Right now, this is a very interesting chart that I wanted to take you through. This basically shows, I had written this on Twitter as well, that what is the correction on the small cap indices that happens from the peak to the bottom. So as you can see, this is the small cap index year, peak PE, bottom PE, what is the correction, and what are the 3-year returns. Now as we speak, we are at about minus 20% correction. Now let us see how the previous corrections have been. So 2008, which was the most brutal, the small cap actually went down by 75%, but in the next 3 years it went up by 3 times, right? Now 2011 was another big correction, where the peak of 24 went to 12, 45% correction, and the index doubled in next 2 years. Again in 2018, 42% down, it went up 1.5 times. 2020, 39% down, went up 2.3 times. Now this time we started off at 32 PE, which is very, very high. In fact, at some indices it was 36 also, and we are at 27. So we are not fully finished in small cap, is my understanding, and it is an ongoing correction. And from ongoing correction, where do we go? We probably will become double or two and a half times from the bottom. But where is the bottom, that no one knows. Now, if any of this is an indication, the small cap index probably can bottom out, let's say even at 15. That basically means we have still 40-50% down to go of the correction that we already done. So the total correction on the small cap might not be 50%. I'm not saying for a moment that we'll fall 50%, because I don't think there is any bad trigger right now, right? All these corrections had a trigger. This was GFC. This 18 was the change in rule of the mutual funds, which led to the collapse. Then this was COVID. So we don't have a reason right now except for the valuation. But just if purely valuations have to go to even, let's say, a 20 kind of a PE, then we are still looking at a huge correction coming in small caps going ahead. Now, if you look at how the markets closed on Friday, this is how the sectoral indices are. So autos is 2.58. Now, why is autos going down is because there is a change in EV policy that has happened. So import duties from 110% odd have been cut down to 15%. Now, that would mean that a lot of these EV guys, including Tesla, BYD, etc., are going to make their presence felt in India. So what is going to happen to our local industry players, EV players like M&M, Tata Motors, etc.? That is a big concern. So hence you can see that auto has gone down, and I would just like to take you through what is the worldwide share of the EV market. This also is a tweet that I had written on Twitter. So just in case anyone is not following me on Twitter, they can do so over there as well. So this is the market share. BYD is number 1 with 23%. Tesla is number 2 at 11%. And then there are a lot of these Chinese guys who are there. Volkswagen is at 4.2. So you can see there is no Indian player in the top 10 in the world right now. So that probably will be a concern once all these guys come in, because 15% duty, all these guys will come into the Indian market, and hence you are seeing this kind of a reaction. Now similar is the case with pharma, media, etc. All of them are down. IT is down, banking is down, and so on. And VIX also was, I think, down. Or VIX was slightly up, maybe, I'm not sure. But metals is up, and FMCG was down. So all the indices actually closed on. Yeah, VIX is down 1%. That's what I was saying. So expect this VIX to shoot up on Monday morning, because that is, if there is a gap down, then VIX will generally tend to shoot. And I had said that VIX at 14.5 is at the bottom end, towards the bottom end, because bottom, it usually happens around 12. So once it becomes elevated, it goes to 16, 17, 18 range. It goes towards the 20 mark. So that is something to watch out for. Now coming to how the global cues are, which is what I was talking about. The NASDAQ is a minus 2%, and the US 10-year has collapsed again at 4.4, which is not necessarily bad. US dollar index is 106, S&P futures minus 1.7, oil has collapsed at 74. So this is actually good news for India, but not so good news for the global markets, which basically indicates that there might be further weakness in the global markets. So the main big news is how NASDAQ has fallen and how the US markets have fallen. And because of that, the impact on the Indian markets going ahead on Monday. So things don't look all that great. Things haven't been looking all that great for last 5 months now. And FIIs continue to sell almost relentlessly every day. So there is a limit to which the domestic money is going to be able to absorb that kind of selling. And we have seen that the mutual fund inflows are still robust. Now, once small cap and mid cap start to correct, then we have seen that these flows also might not hold, the domestic flows. And if they don't hold, then we are looking at a steeper correction. Best case scenario will be that we go ahead in the time-wise correction, the similar correction that happened from from September 21 to March 23. It was more like a time-wise correction. So if we can get away with that, it's great. But if it is a big fall correction, like the last 5 months we have seen, then we can be looking at our multiples further contracting, and our markets coming to saner level. Because what had happened, that there was all around frenzy, a lot of IPOs, a lot of small caps, a lot of things were just getting flying off the roof. There was no sanctity left in terms of valuations, and companies were trading at 200 kind of PE, and 2045 earnings were being factored in. So it was frenzy, and that is typically how bull markets end. And they did, and a lot of smart people, actually a lot of foreign promoters, etc., they sold their stakes. A lot of Indian promoters sold their stakes. So a lot of selling has already happened in that bull market, and now the retail investors are stuck somewhere at higher levels. I know a lot of people who have made their portfolios in small caps and so on, and they're stuck. They don't have a way out because they have taken stocks which are not of very high quality. And that is what I advise all the people against, that please do not venture into these names. Please construct your portfolio systematically through mutual funds, because even if there is a fall, then you can, you always have a cushion, right? You can always buy more mutual funds, you can always buy more indexes and so on. You're not scared that it'll go to zero. Whereas if you have some suspect names, some small cap names, which are down minus 50%, what do? You don't have an option left, because you can't wait for it to go to zero, right? So, so I advise all my clients what to do during such phases is that if you have a asset allocation, maintain that. And if you have the stomach, if you have the cash, because what I also suggest a lot of my clients is to hold some amount of cash as well, be it in liquid funds or whatever, so that you can keep deploying, you can maintain your asset allocation. And once you have a proper asset allocation, you don't panic during such times. You in fact feel glad that you have the cash and you can add more. So as I have said before, if anyone is interested in creating their mutual fund portfolio, please reach out to me. There is a Google form that is there. So once you fill that form, I'm going to have a discussion with you, and I will help you make a very good solid portfolio of mutual funds, which will be very well balanced. And it is probably I also, when I make a portfolio for someone, then I just don't make it randomly. I take into account what are the life goals, what are the things that one wants to achieve in the next 3 years, 5 years, 10 years, what is the kind of compounding that they're looking at, right? So hence I will advise people accordingly how to go about it, and I don't charge anything for it, right? Because I am a mutual fund distributor myself, so I don't charge anything for it. And so if anyone is keen for that, please do get in touch with me through the Google form, and we'll have a very nice structured discussion around it. And hopefully, because corrections like these should not also be wasted, right? Because they do not come every time. Like if you miss the last bull market, you had to wait almost 2 years for these kind of levels to come. So every day, when the market is going up, then you feel like, oh, I should have invested in the bear market. Now when the bear market is here, and this bear market is also not a small bear market, because the last correction that happened on the election day was 1 day correction, right? So you could never catch that. So this is a prolonged bear market which is giving you a lot of opportunity and chance to get in. So please make full use of it. So that's it from me now. Let's see how the Monday morning opens up. It looks tough. Be prepared for some sort of correction, crash, etc. But don't lose hope. Maintain your asset allocation and be sensible. Don't panic, right? And that's it from me now. And if you like my channel, please do subscribe to it if you haven't already, right? So please do subscribe. Please share it with your friends if you find this video content interesting, and I shall see you on Monday with the another update. See you. Take care. Bye bye.